Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 7 dividend ETFs to buy in March 2024. We're diving into the world of dividend exchange-traded funds, ETFs, to uncover the top 7 options for securing stable income in your investment portfolio. In this video, we'll break down each ETF, highlighting their key features, investment strategies, and potential benefits. Whether you're a seasoned investor or just starting out, this comprehensive overview will provide valuable insights to help you make informed decisions. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Number 1, the Vanguard Dividend Appreciation ETF. ETFs, or exchange-traded funds, are a top choice for investors seeking the best dividends. With assets under management totaling $74 billion, it stands as the largest dividend ETF available. What's more, its expense ratio is a mere 0.06%, translating to just $6 annually for every $10,000 invested. Unlike certain other dividend ETFs that prioritize achieving a high dividend yield at any cost, Vanguard Dividend Appreciation takes a different approach. It focuses on companies that consistently increase their dividends, resulting in a modest yield but a portfolio of high quality. This strategy positions investors to benefit from steady dividend growth over time. Currently, Vanguard's portfolio comprises approximately 300 leading dividend-paying stocks in the U.S. market. Among its top holdings are tech giants like Microsoft Corporation, MSFT, and Apple Incorporated, APL, insurance powerhouse United Health Group Incorporated, UNH, and consumer healthcare leader Johnson & Johnson, J&J. Number 2, Vanguard High Dividend Yield Index ETF. The Vanguard High Dividend Yield Index ETF is an excellent option for investors looking to add stability and income to their portfolios. With over $51 billion in assets under management, it's clear that this ETF has gained the trust of many investors. And with an expense ratio of just 0.06%, it offers a cost-effective way to access high-quality dividend-paying stocks. One of the standout features of the Vanguard High Dividend Yield Index is its impressive dividend yield of 3.1%. In today's low-yield environment, finding investments that offer a solid income stream can be challenging, but the Vanguard High Dividend Yield Index delivers in this regard. Additionally, the ETF's portfolio is well diversified, consisting of approximately 460 stocks across various sectors. Vanguard High Dividend Yield Index specifically targets companies with a track record of offering above-average dividend yields, which can provide investors with a reliable source of income over time. Some of its top holdings include established names like ExxonMobil Corporation and J.P. Morgan Chase & Company, which are known for their strong financial performance and dividend payments. While the Vanguard High Dividend Yield Index may not hold the most dominant companies in every sector, its focus on blue-chip stocks ensures that investors are exposed to stable and established companies with proven track records. Whether you're a conservative investor looking for income or someone seeking to diversify their portfolio, the Vanguard High Dividend Yield Index offers a compelling investment opportunity. Number 3, Schwab U.S. Dividend Equity ETF. The Schwab U.S. Dividend Equity ETF is a top choice for investors looking to add dividend-paying stocks to their portfolios. With $52 billion in assets, a low expense ratio of just 0.06%, and a solid dividend yield of 3.5%, it's a standout option in the market. One of the key factors that sets Schwab U.S. Dividend Equity apart is its focused approach. Unlike some dividend ETFs that hold hundreds or even thousands of stocks, Schwab maintains a concentrated portfolio of just 100 companies. This selective strategy allows it to target only the most promising dividend-paying stocks, potentially leading to higher yields for investors. Currently, Schwab's portfolio includes well-known companies like Broadcom Incorporated, AVGO, and AbbVie Incorporated, ABBV, both of which have a track record of consistently paying dividends to their shareholders. While Schwab offers the benefits of a low expense ratio, sizable assets under management, and an attractive yield, investors should be aware that its concentrated portfolio also comes with increased risk. By focusing on a smaller number of stocks, Schwab's performance can be more volatile compared to ETFs with broader diversification. Overall, for investors seeking a dividend ETF with a solid track record and the potential for strong returns, Schwab is certainly worth considering. However, it's essential to evaluate your risk tolerance and investment goals before making any decisions. Number 4. Global X Super Dividend ETF, SDIV. Stand out in the realm of dividend-focused ETFs. With assets under management totaling an impressive $738 million, Global X Super Dividend has garnered attention for its unique approach to generating income for investors. One of the key metrics that sets Global X Super Dividend apart is its dividend yield, which is currently sitting at a remarkable 12.2%. This figure, coupled with an expense ratio of 0.58%, makes Global X Super Dividend an appealing option for those seeking robust dividend returns within their investment portfolio. What makes Global X Super Dividend particularly intriguing is its departure from traditional investment strategies. Unlike many dividend ETFs that predominantly focus on established blue-chip stocks, Global X Super Dividend takes a more eclectic approach. Over 60% of its portfolio is allocated to international investments, providing investors with exposure to diverse global markets. Additionally, with over 30% of its holdings in real estate, Global X Super Dividend offers a unique opportunity to capitalize on income generated from property assets. While the pursuit of higher dividends inherently entails increased risk, Global X Super Dividend aims to balance this by selecting companies with a history of providing substantial dividends. This emphasis on income generation may appeal to investors looking to bolster their portfolio's overall yield potential. It's worth noting that Global X Super Dividend dividend yield significantly exceeds that of 10-year U.S. Treasury bonds, which currently yield around 4.2%, also carry a higher risk compared to these fixed income securities. However, for investors willing to tolerate some volatility in exchange for potentially higher returns, Global X Super Dividend presents an intriguing option to consider. Number 5. Vanguard Real Estate ETF. The Vanguard Real Estate ETF is a robust investment option with significant advantages. With assets under management totaling $32 billion, this ETF boasts an expense ratio of just 0.12% and a dividend yield of 4.2%. For those seeking higher yields with a preference towards a specific sector, directing attention towards real estate investments can be lucrative. The Vanguard Real Estate ETF stands out as the premier avenue for achieving this objective. It specializes in real estate investment trusts, REITs, offering investors a prime opportunity to capitalize on the income-producing potential of this sector. REITs are a unique class of publicly traded companies mandated to distribute 90% of taxable income to shareholders, ensuring consistent and sizable payouts. Notable holdings within this ETF include Prologis Incorporated, PLD, a leader in industrial property and warehouse ownership, and American Tower Corporation, AMT, specializing in telecom infrastructure. These holdings exemplify the diverse income-generating possibilities within the real estate sector, extending beyond traditional assets like shopping malls or residential properties. Number 6. ProShares SP 500 Aristocrats. The ProShares SP 500 Aristocrats stands as a beacon of stability and reliability in the world of dividend ETFs, managing a substantial $11.6 billion in assets. With an expense ratio of just 0.35% and a solid dividend yield of 2.1%, it's a go-to choice for investors seeking consistent income generation coupled with long-term growth potential. What sets ProShares apart is its strategic focus on dividend aristocrats, a prestigious group of S&P 500 companies renowned for their unwavering commitment to increasing dividends for at least 25 consecutive years. This elite status isn't easily attained. It requires weathering various market storms, from economic downturns to global crises like the recent pandemic. Yet these companies have not only survived but thrived, proving their resilience and reliability in dividend payments. While the dividend increases from these aristocrats may seem modest at times, even as little as a penny per share annually, their consistency is key. It's a testament to their financial strength and management's commitment to returning value to shareholders. And while ProShares might not offer the highest yields compared to some other dividend ETFs, its focus on quality over quantity ensures a steady stream of income and the potential for sustained long-term growth in dividends. Investing in ProShares isn't just about chasing high yields. It's about building a portfolio anchored in stability and reliability, traits that are invaluable in navigating the ups and downs of the market. With ProShares SP 500 Aristocrats, Investors can rest assured that they're not just buying into a fund, they're investing in a proven strategy for long-term wealth accumulation. Number 7. iShares International Select Dividend ETF. Consider adding the iShares International Select Dividend ETF to your investment portfolio. With assets totaling $4.2 billion, an expense ratio of 0.51%, and a dividend yield of 6.6%, iShares offers a compelling opportunity for income-focused investors with an international outlook. This ETF focuses on dividend-paying stocks outside the United States, providing exposure to multinational companies in developed markets. While researching overseas dividend stocks may require additional effort, and dividends may be paid less frequently compared to their U.S. counterparts, many international companies are notably generous in profit sharing. iShares International holds significant positions in companies like Rio Tinto Group plc, British American Tobacco plc, and Nippon Yusen, reflecting its robust yield. By investing in iShares International, you gain access to a diversified portfolio comprising 100 top global dividend payers through a single, straightforward ETF. Investing in dividend ETFs can be a prudent strategy for those seeking stable income and long-term growth in their investment portfolios. From the reliable dividend growth approach of the Vanguard Dividend Appreciation ETF to the high-yield opportunities presented by the Global X Super Dividend ETF, there are options to suit various investment goals and risk preferences. Remember, before making any investment decisions, it's crucial to assess your own financial situation, risk tolerance, and investment objectives. Diversification is key to mitigating risk, so consider combining different ETFs to create a well-rounded portfolio. If you found value in this video and want to stay updated on more investment insights and recommendations, don't forget to like, subscribe, and hit the notification bell for our weekly updates. Thank you for watching, and happy investing.